This is not financial advice. I'm recording my thoughts about uipath. uipath stock is up double digits after they've announced their recent quarter results. Personally, I'm surprised with this because even though they have beat the revenue as well as earnings per share estimates for the previous quarter, in the next quarter, their guidance was not too great. In addition, despite having $1.7 billion of cash, cash equivalents, and marketable securities, they decided to dilute the shareholders by 3.4%. This should have caused reduction in stock price, but the stock price went up. So I would love to hear your thoughts on what I'm missing here. In the latest quarter, they did increase their revenue by about 19% year on year to about 262 million. Their dollar-based retention rate stayed at above 120%, which is great. And their gross margins are also above 80%, which is still great. But for the next quarter, they're only giving guidance for 277 to 279 million dollars of revenue. But when you look into the previous year for the same quarter, they made about 289 million dollars. This represents a reduction of about 4% in revenue year on year. So that's not actually a good news. And when I look into the outstanding shares, they increased by about 3.4%. They had 531 million outstanding shares last quarter, and this quarter it's about 550 million. This means that they have given stock-based compensation and didn't buy it back despite having $1.7 billion of money, right? Now I'm going to show the evaluation for Jan 2027. I've shown the same evaluation few weeks ago when they released their previous quarter results, but I'm keeping the same evaluation for this video as well. This evaluation, I'm assuming $1 billion of revenue, and they're on track to achieve $1 billion of revenue this year. So that's a good assumption. They grew about 19% this quarter, right? And I'm assuming 15% revenue growth in the next 4 years on an average. This is hard to do, but I'm still going to assume that it's going to be there. And with that, they will make about $2 billion of revenue in 2026. Since their gross margins are north of 80%, I'm assuming a premium net profit margin of 35%, which will result in a $700 million of net income. I'm giving a multiple of 25, with which this company would be worth about 17.6 billion. As you know from my previous video, I only assumed 1% dilution because I thought uipath has a lot of cash, right? Almost $1.7 billion. So I thought they wouldn't dilute the shareholders by more than 1% in a year, right? But they decided to do 3.4% dilution in 1 quarter, right? But I'm still going to keep the same assumption for this video because who knows, maybe they'll buy it back next quarter, right? But at the moment, this is still not impressive, but I'm going to keep the same 1% dilution, which is they will have 579 million outstanding shares, already 550 million now, right? And I'm assuming only 40 million more in the next 4 years, which is optimistic. And with that, the stock price would be about $30. Currently, they're at 14 point something, right? So that's about 2x with a lot of execution risk. I'm still going to stay away from uipath unless they show us great execution in the coming quarters.